What's up, everybody, and welcome to this week's edition of BlackBoxBeat. It's going to be an interesting show today. I am Kang.
I'm Maria.
And I'm Hell.
Yo, so everybody I know was watching what was going on today with Powell. And either whatever side you're on, you're saying either FML or maybe you're super happy. Who knows? But either way, Powell was, and the Fed was the topic for today. We actually got a quick clip of some of the news conference from today. Let's go ahead and get right on into that.
We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that. In principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted, but that's what we'll be watching carefully to find out.
So, Powell working real hard there to kind of thread the needle, and talking about different things. Hells, I see your head over there. I see you shaking, man. What's on your mind?
Thread the needle? Thread the needle to where and what? It's like, how can you have a dude get on stage once again and say, I don't know, I don't know, I don't know. And then even talking about the bank runs, once again, he's like, well, we had no idea a bank run could have that. It could happen that fast. It's like, it just over and over again, it just speaks to the just massive level of incompetence coming out of these people on a weekly basis. It's like every single speech, it's the same. It's the same thing. I don't know. I don't know. I don't know. Where's the actual I know? Where's the actual direction? Where's the confidence? There's no, even his body language. He's fidgety. He's like about as fidgety as like a 7-year-old that just pissed his pants in like kindergarten. He's just like, well, what do I do? What do I? Unbelievably ridiculous. This guy is supposed to be in charge. He's supposed to know. You're not supposed to say, I don't know. What are you doing?
But wouldn't you rather somebody say, like, if they can't see the future, and I'm not defending him, but I'm just saying, wouldn't you rather somebody say, I don't know, rather than bullshit you?
I would.
Mario, please go ahead before I start screaming again.
I was going to say, to a certain extent, yes. I'd rather not be bullshitted. I'd rather someone just tell me straight up they have no idea. But I get what Powells is saying, too. This is someone who's supposed to know. And for that person to now come out and say, I don't know, repeatedly, it kind of, from a trader's perspective or even a consumer perspective, it kind of makes you question your own confidence in that individual, right? So it's not that I want to be fed lies. I don't. But I look to that person to be someone who can tell me what is what. And I think that's where the problem is.
Yeah, I think because that's your job.
I think the way that I see it is like, again, I'm not defending the Fed at all. I'm just, the way that I kind of see it is, you can speak on what's happening right now, but nobody knows what's going to happen 2, 3, 4, 5 months from now. So that's kind of the way that I'm looking at it. And, I was really, really paying attention to that price action that we were seeing today, not to shift gears, but, really, really, I think today, at least the pivotal kind of takeaway line for me was when he was talking about the forward guidance, in terms of when he was asked about those rate cuts, were they going to model in rate cuts? And right now he was basically saying that was not in their forecast. And right after we saw that come out of his mouth, then or heard that pretty much, then that's when we started to get some weakness. So I think that at least for right now, who knows what's going to happen tomorrow? Who knows what's going to happen on Friday? But at least for the moment, I think that caught the market off guard because Fed funds futures are actually pricing in about 75 basis points worth of rate cuts between now and the end of the year.
Yeah, but it's basically a replay of his last speech to where he basically said the same thing. If you go back to last FOMC, we were rallying pretty hard until he basically said the exact same question, same answer. We're not cutting rates. It's not on our our scope or whatever you want to call it, and the market bled out. And then within, a couple of days, we were banging right back up to the top of those levels. So I think this is what happens overall when you have somebody like him who, it's like, look, if you're going to say, I don't know, I don't know, I don't know, and then try to make a bold statement like that, which one is it? Do you not know or do you do know? It's like, what is it? Because you can't sit there and consistently say, I don't know, but guess what? I know on that. And then you want to hold up your little 8 ball and be like, well, he can't tell the future. Well, he just told the future saying, no, that's not going to be the case. So it's like, at the end of the day, this is all a bunch of bullshit. It's like, and I can't
I
say
mean,
it enough.
but
They
based
are
on the
feeding
data that they have
massive,
right now,
no,
they
I'm not
don't
done.
know.
I'm not done. They're feeding massive lines of crap to not only the market but to the American people to cover up their own mistakes and their own flaws. You blow out banks and be like, "Oh, this is kind of sort of part of the plan to destroy banks so we can tighten up credit." This is preposterous. That anybody would sit there and be like, "That's super. That's great. Go Papa Pow." No, sorry.
Banks blowing up though is not a function of the Fed. Banks blowing up are lax risk management by the bankers themselves. So there has to be some accountability to those, risk managers who went long duration and didn't model into their forecast that you could not. I don't think anybody saw 500, basis points worth of rate hikes in a year. But at the same time, there has to be a lot of accountability placed on the shoulders of these risk managers at these banks who went too
Right,
heavy on
and there
long
was a
duration.
member of the Fed basically sitting on the board of Silicon Valley Bank. So it's like, come on, it's like you can't have it both ways, and that's what's disgusting about this conversation. It's like you cannot speak out of both sides of your mouth. It's one way or the other, not both.
Well, let me just put this to you really quickly. There was a guest, and I forgot his name yesterday that I saw on TV, and I think he, at least this is for me, what made the point and drove the point home very quickly, and that is that there was a recent bank rate survey that was done where 57% of people are living paycheck to paycheck, can't necessarily even shoulder $1,000 emergency. And, I think if Powell right now has to look at rich people who might get their stock portfolios hurt if we continue to raise rates because, we're trying to basically tame inflation versus these people, it's 57% of people who are having trouble paying the bills and or living paycheck to paycheck. He's going to take care of the 57% of people who are having problems paying these higher rates. So right now, the Fed is solely focused on inflation. It is solely focused on inflation.
Mark, you want to pick up there, or
And,
do you want me to swing
yeah.
again? Because it's like it's like so
Why
what
don't
higher
you,
pay.
why don't you go ahead?
But what? Because honestly, think about what you just said. Oh, he wants to think about the people, but paying higher interest rates on credit cards, that's super. That helps people. Paying higher interest rates on homes, on cars, on any type of debt, not being able to access money, all of those, that's supposed to help the people. Are you kidding? Do you not even understand how this works? It's like
The
I'm
major
confused
I
here.
understand it very well. The majority, like so many, and it's a very high percentage of people who have mortgages are locked in around 3 to 4%. Now, if it's talking about people who are taking on new mortgage, then that's what they're trying to do is to reduce demand. So obviously, if you're facing 7%, you might not necessarily take on that mortgage. These are all in macroeconomics 101.
So just doing a real good job of dampening the American dream. Let's do it. Let's do it. Let's crush people. Let's keep them from
It's
Isn't
been
achieving
that what
what,
they
banging
what
for
they
how
can
many
hope
years?
they could.
isn't that what they said? Isn't that what they've already come out and said? Is that we have to do worse in order for inflation to stabilize? So maybe he's just
So we
supporting
have
that.
to we have to raise rates in order to, as a function, to bring down or throw a wet blanket on demand to bring down inflation. These are like common things.
So inflation is pulling back, demand is pulling back, all data points are pulling back, everything is moving the right direction. I'm not arguing with whether or not rates needed to go up this time or not. That's not the argument. The argument is specifically don't talk about Are we helping or hurting people by doing this when specifically you put people in pain? Credit card debt is extraordinarily high right now, and they're paying a higher interest rate for it. That's fact. The amount of savings
But
that
that's
people
not a,
have
you
are
don't have to have, I mean, but you, again, that's, that's like, not everybody has credit card debt.
I think the majority of Americans do have credit card debt. I think it's like the American dream is based off of credit and
But
accessing
isn't
credit.
that personal? Isn't that
It's like,
goes back to personal
come on.
responsibility?
It's just like
That goes back to
no.
personal responsibility, right?
All right, we got to find a different topic because you're just
Yeah, personal responsibility. Don't run up those credit cards. All right, folks, let's get right on over to Shag, Marry, Kill. That is the next one up on our list today. Y'all know how this works by now. Shag is going to be something short term, up or down. Marry is in a position for over a month, at least for a minimum of over a month. That means we're booing up right there. And Kill is either we're going to exit that position or we are not touching it whatsoever. So it looks like Maria, you are up first.
All right, I am going to, or my selection is Pan W. This is a Mary. You can see the chart there. It's not necessarily the best spot, but I followed this flow primarily because it's out to 2024. So they bought the June 2024 195 calls into Pan W, over 3 million in premium. If you look at the OI right there, OI still looks really great. They're not exiting that position. I plan on swinging this one for quite a while, and it's one of those sectors that can be kind of fun. So we'll see. We've got so much time on it. I think this could be a fun play. It's a Mary for me right now.
I always like the
For
idea
me,
of being of that.
oh, go ahead.
Yeah.
Oh, I was just going to say for me, it's going to be a kind of a wait and see. I like your thesis, Maria. I will just let it cook a little bit before I decide to, or before I would decide to hop in. But I do like all of, I do like all the points that you made. I think that when it moves, it definitely can. So I'm definitely going to be watching this one.
Yay.
Yeah, I'm with you. I kind of like it. It's like it's also acted inverse to the market in a lot of ways. And if we're going to throw the wet blanket on tech and do that at this point, I think it could be a good flight to safety type move. I dig it. I do.
I like it. Yay. Thank you. Thank you.
So now is it my
You
turn?
have
What you
All
got?
right.
turn.
Is it my turn? The past couple of weeks, I've made it fairly clear that until we get past Fed, until we get past mega cap ER, that I'll be scalping, and that's basically what I've been doing the last couple of weeks. Apple reports tomorrow, so that's going to be the end of the scalp, if you will, as far as me getting back to opening up trades. I still have the Netflix put open. I did open up a put on Meta out to next week today, based on some of that FTC regulation news. I think that there's some room to the downside for Meta. So that's kind of where I'm at right now as far as the overall market. We've done very well in Roadhouse scalping, like extremely well using options flow. It's like in this environment to where, especially with Fed today, you saw these candles. It's like $1.50 move on SPY in like 4 seconds. It's like it becomes very difficult to open up positions with any type of confidence, especially when you have Jimmy Crack Corn over there sitting there talking about I don't know, and I don't care. He doesn't have confidence in what's going on. Why the hell should I? So maybe I could continue to scalp.
So Hells, I've done a lot of the same. I've put on some positions, but anything I've put on has a lot of time. They're not short term or intermediate term swings. The majority of them have plenty of time on them, and I plan on holding them, for the majority of the time that I've bought. So I kind of like it. I wanted to see what happened today. I would like to see how Apple comes out tomorrow, and then kind of get a feel for which direction the market wants to go.
Yeah.
I agree with you both. I think there's definitely some uncertainty. So I'm in scout mode too. I wanted to wait on today to kind of get under our belts and kind of get that in the rear view. And this kind of brings a good segue for me. My one this time is going to be Apple. Now I don't necessarily have a trade recommendation on it, But I just wanted to call attention to the setup right here. You're in an ascending wedge, and this is on a longer time frame here. So of course it may have longer to play out. And the market isn't necessarily, at least here in this chart, it isn't suggesting one direction over the other. But I think that Apple is, such a bellwether. It's in almost everybody's portfolio, and I think it's going to have a big impact on the market tomorrow after the bell when they report. So I just wanted to call attention to this setup. I'm with Hells, in the fact that I'm just kind of sitting tight, Maria, like you were talking about too, kind of scalping intraday. But I like the setup right here as it's compressing, going into the print. So I think that definitely it's going to have an impact. We'll see how that goes tomorrow afternoon.
I like it. It's a shag for me. Don't know which direction yet. Could be up, could be down, but definitely going to be watching it post DR. That will definitely be a big mover.
Yeah, Apple is the market, right? It's like, and it's the last big dog to report. So, everybody's reported. They reported fairly well. Let's see how Mr. Apple comes in.
For show. So, folks, we love to hear from y'all. Love, 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 love to hear from y'all. Actually, this is bonus time. We actually have 2 member questions this week. So, Hells, you got the first one.
Yeah, absolutely. So we had a question from a watcher actually during the show last week, which is pretty cool. Basically, giving the best bull and bear case that I can kind of come up with as far as a couple of tickers. So I'll go ahead and take a swing of that. Give us your best bull case and bear case. So Netflix would be the bear case. I'm still very steadfast in the fact that I believe Netflix is going to have problems with growth. Their growth valuation is something that they're not deserving of by any means. And for that space in that sector, I would much prefer to be in Disney over Netflix long term. Their concept of going ahead and trying to create a healthy balance sheet by not producing content is probably not a great long-term solution. They don't have the funding and money to get into sports. They have no idea what they're doing when it comes to gaming. Netflix to me is a long-term bear case. As far as a long-term bull case, I'm looking at Intel, oddly enough. It's like you're in a sector that is so important and so vital for the future of really anything, from AI to defense to whatever energy to whatever you want to call it. Intel has been a leader for years. They've gone through a massive turnover as far as leadership within the company. They put together a good ER. And if you notice the price action on it, even with AMD taking the dip that affected NVIDIA at the same time, Intel did not. It's like, so in a lot of ways, when I look at Intel, maybe the bottom is kind of in that 25-ish level. Intel, for me, bull case long term. If you don't nibble here, where are you going to nibble as far as, the long-term bull case on Intel? So I really appreciate the question. Really, really good question.
Mine, just very quickly, mine is going to be like, I don't necessarily obviously know exactly where things are going to go. But I would say with time, the quick and dirty is best bull case is going to be to short. Well, it's going to be volatility. So I would go long on volatility here. Of course, with time, by a couple of, at least I'd be looking 90 days out. I'd go long volatility, short, and my bear case would be short SPX. Again, both would be looking at a minimum 90 days out. So that would be my best bull and bear case.
Hey, Hells Bells, before I answer, if I say I don't know, are you going to be mad? You're going to be mad if I say I don't know?
You're saying you want to short the market altogether, that you're short the market. I want to understand that. Correct.
I mean, I'm glad these are recorded because we can play them back later. Yes, because we're at resistance here. Right. And we just had a Fed. We just had a Fed that you have economic indicators that are deteriorating. And although inflation is coming down, you have this last about 3.5% that's going to be very sticky. And he just said that they're very committed to 2%. So yes, buy time.
Okay. Sorry, Mario.
No. I do have an answer, but before I answer, if I say I don't know, are you going to get mad at me? I'm just kidding. It's a joke. I'm just giving you one more time.
If you were in charge of all the monetary decisions within this country and potentially the globe, yeah, I'll go ahead and skewer you, but you're not, so you get the pass.
Okay, good. So that is my answer. I honestly, I don't know. I use options flow to show me rotation into different sectors to give me an idea of whether people are risk on, risk off, whether they're bullish or bearish. And without clean flow, which we've not had, it's been muddied by earnings and everything else. Without really clear, distinct flow, pristine flow, I can't say what's a bear case or a bull case. I have to wait for all of the earnings, gross earnings next to come out, and then for flow to come in and show me where money wants to go before I can say, you know what, I do like this sector. I see it in the chart. It's supported by flow. I like this. So for now, I have no idea.
All right, so this one is the next one up, folks. I told you this is bonus time. Delta Magnet asks, do you guys think we rally from here, or do you think the Fed will come in and be a total buzzkill? So what say y'all?
I mean, who knows, right? Do you guys think if we rally from here? That's another I don't know. Do I think that there's a possibility that what's happened before could happen again, where we, sell off a little bit on the actual announcement and then we turn right back around and rally? I think that could happen. That wouldn't surprise me. What I will tell you is that I will be prepared.
Are we on it? Okay, here we go.
Oh, things froze a little bit there. I'm going. Look, we've been in this range from like 4,200 to like 3,800, and we've constantly been ping ponging back and forth. So naturally, we're here at resistance. Who knows which way we're going to trade from here after the Powell presser today. So can't say that I know the future. I would be technically leaning more to the downside, especially given the economic data that we've been getting. But we'll see.
Yeah, hey, I'm look. Number one, I love Delta. He's a pal. So thanks for the question, bud. Look, it's. I think who knows is a great question, but right now at this point, we're not seeing like massively bearish activity, and we're to the point now when it comes to some of these the bull lines, ERs are kind of fading, so we can expect to see profit taking. I think the mistake comes in understanding the difference between profit taking, simple profit taking, and oh, we're going back to the depths of hell. I don't know that I can get overly bearish here, but I certainly don't feel overly bullish. So as far as buzzkill, I don't know. What's your buzz? What gets you off is the question, or should be the question.
Well, hey, it sounds like all three of us are like Powell. We don't know. We can't see the future, right? We all sound like Powell. Hey, all right, folks. We love to hear from y'all. We'd love for you guys to submit your question. Please send us a quick email with any future questions that you may have. BlackBoxStocks or BlackBoxBeat at BlackBoxStocks.com, or you can scan that QR code there at the bottom of the screen. But that brings us to the end of the show, folks. We hope that you guys had a great time. Look forward to seeing you next week. Please make sure that you like and subscribe on our YouTube page so that you can get those notifications when we go live. So from all of us here, we see you next week, and stay green.
Bye, guys.